Everybody, good morning. So we got Rob and Don and David. How's all those monitors going, my man? We've got Lieutenant Colonel Goose. Good to see you. And well, I mean, rumors are flying that Trump's going to take Fannie and Freddie public. I mean, he's been talking about that since before. I mean, that was part of his campaign thing. And Fannie Mae, Freddie Mac. So I mean, I don't know. We'll see. And Barbara, welcome. Craig, Sergio, let's get that bacon. Mark, Donald, B, Will, Larry, Kimberly, my favorite subscriber in the chat. And General Rush, good to see you, sir. Ed, Sledge, Captain Sledge, Cliff. Wonder where Major John went. He's been AWOL for a little while. Jason, Diane, Carlene, Douglas, good to see everybody. Nancy, Scott, Ted. If I missed anybody, I'm sorry. The chat kept jumping every time somebody sent a new message. Gayton, wrong number. And so picture this. You're at a party. Everybody's talking about their amazing new AI stock picks. Your cousin just bought NVIDIA at the top. Your barista is day trading Palantir. Even your grandmother is asking about that chat GPT thing. Any of this sound familiar? Well, congratulations. You're officially living through what might be the biggest bubble since people thought pets.com was going to, revolutionize the entire world. Well, maybe pets anyway. All right, today we're talking about Michael Hartnett once again from Bank of America. He's the chief investment strategist and professional party pooper, if you will. This guy writes something called The Flow Show, which sounds like a Netflix series, but it's actually just a weekly reality check for investors who have lost touch with, reality of the stock market. And recently, Hartnett dropped a bombshell that should make just about every AI heavy investor sweat more than a Tesla owner looking for a charging station when they're on 0%. So let's rewind to April when Hartnett calls Liberation Day, no. It wasn't when we finally got rid of those annoying pop-up ads. It was the market crashed. We had Liberation Day. And everybody thought the world was kind of coming to an end. But something magical happened. We went on a straight line rocket ship recovery to the moon back to all-time highs, powered entirely by this artificial intelligence hype stuff. Here's where it kind of gets interesting, though. By interesting, I mean I'm a little bit scared about everything. Call it terrifying, right? Since April, just 10 stocks. 10 stocks. We're talking about the Magnificent Seven, plus a few tag-alongs like Oracle and Palantir, have been responsible for 80% of the entire market cap gains of the S&P 500. That's like saying one kid in your class did 80% of the work on the group project, except this time everybody's getting an A+, and nobody's even asking questions about what the heck just happened. So Morgan Stanley, those optimistic traders think the Titanic just needed better marketing. They just calculated that companies will spend $2.9 trillion on AI by 2028. That's trillion with a T. To put that in perspective, that's enough money to buy every Starbucks coffee sold in America for the next 50 years. Think about that for a minute. And what we're talking about here, I mean, what are we going to get for that massive investment? Well, according to productivity charts, about as much benefit as maybe a chocolate teapot. I'm sure that's going to melt on the stove, right? Here's the kicker. AI is supposed to make us all super productive, right? Wrong. That's not what's happening so far. U.S. labor productivity is flatlining harder than a bad TikTok trend. Meanwhile, unemployment for recent college graduates, this isn't looking too good. It just hit 8.1%. Recent college graduates, the best and brightest newcomers, 8.1% unemployed. Apparently, AI is great for everything except actually helping humans do their jobs better and faster and slicker. Who could have seen this coming, right? I mean, maybe we'll get there, but maybe not right now. Now, Hartnett isn't just throwing darts at a dartboard here. He's got specific signal he's watching for, and it's not pretty. He says that AI party continues until the tech credit spreads widen. In normal human language, that means when investors start demanding higher interest rates to lend money to tech companies because, well, maybe we're getting a little nervous about all this AI nonsense, not actually paying the bills. I mean, this whole thing, it harpens back to Meta, Facebook, changing their name to Meta, investing in the metaverse. Look how well that worked out. I'm sure we're all sitting here in the metaverse, right? Now, think of it like this. Imagine you're lending money to your friend who keeps talking about their revolutionary business idea involving selling ice to penguins. At first, you might lend him money at a low rate because, hey, he seems pretty confident and he's done well for you before. But eventually, you start charging him more because you realize this business plan, it's about as solid as a house made of cotton candy. So here's where Hartnett gets really kind of spicy, right? He points out that we've seen this movie before, specifically 1999, right before the dot-com bubble burst, like a piñata at a kid's party. Back then, everybody was convinced that the internet is going to change everything overnight, right now. Spoiler alert, it did change everything. But not before we saw $6.5 trillion in market cap get wiped out of the market. And it took a few years to recover. All right, that turned all the day traders into the equivalent of Uber drivers back then. Uber didn't even exist, that's all thanks to the internet. The internet did change things. It just took a while. AI is probably going to change things. It's just probably going to take a while. The scary part, some economists are saying that this AI bubble is actually worse than the dot-com bubble. We're spending $560 billion to generate a paltry $35 billion in revenue. That's like spending $100 to make 6. All right, $100 bill, give it to your buddy, you get 6 back. Even worse than lemonade stands margins at that rate. Hartnett talks about something called the Goldilocks consensus, where 60% of investors think everything's just great, dandy, we're going higher. This time's different. Interest rates will continue to come down. Stocks are going to continue to go up. Everybody's going to live happily ever after. It's like believing Santa Claus, except Santa is the Federal Reserve, Jerome Powell, and the presents are the stock gains. But here's the thing about fairy tales. They usually don't end well for the people who believe them too hard. The other 40% of investors are kind of split between thinking we're heading for inflation, stocks up, but your dollar becomes garbage, or deflation, where everything crashes and we all move back in our parents' house. If you still got them. Maybe all your kids move back with you. Anyway, meanwhile, in a twist that would make M. Night Shyamalan jealous, the best performing currency this year isn't the dollar or the euro, it's the Russian ruble, up 42%. The best stock market in the world? It's actually Poland. It's up 54% this year. And the Ukraine bonds? They've gained 61% this year. Apparently, while Americans are busy arguing about how AI is going to replace their jobs, the rest of the world's quietly making money out there in obscure places. Hartnett's watching fund manager surveys like a hawk watches a mouse. These surveys are mood rings for Wall Street. They tell you what everybody's kind of feeling right now, and they're flashing warning signs brighter than a neon sign at a 24-hour diner. When fund managers get too bullish, well, it's kind of like where we are in August here. It's usually time to plan for the exit door. It's when everybody at the party's having too much fun. That's usually when the cops show up, take a few people out. So here's your takeaway. Keep your eyes on these tech credit spreads. When the banks start getting nervous about lending money to AI companies and these AI investments, when the interest rates start creeping up, when the smart money starts demanding higher returns for that risk, that's when the AI house of cards might come crashing down. Until then, enjoy the ride, baby. But maybe don't bet your kid's college fund on the idea that ChatGPT is going to solve world hunger because, well, if history has taught us anything out there, it's that when everybody thinks they're a genius in the market has this funny way of humbling everybody and reminding us that we're all not very genius. Remember, in the stock market, the only thing that goes up forever is your kid's student loan debt. Everything else, well, that's kind of what makes investing so much fun out there. All right. So let's get into how we make money today. Right? How do we make money today? So all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results, and this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. And if you desire that personal financial advice, hire and consult a financial advisor. Jumping over here at the calendar for this week. Dun, 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 dun. We've got CPI tomorrow. Should be spicy. Right there, inflation read. And then we get kind of a pass on Wednesday with some Fed members speaking. We get PPI on Thursday, and we get retail sales on Friday. Right there. So, should be interesting. Should be interesting. We also have a fun week of earnings here. Barrick Mining coming in this morning. We got Circle coming in Tuesday. We get, CoreWeave in there Tuesday. Kava. Nothing in here is really sparking my interest a whole bunch. There we get Cisco, the darling of the 99.com bust. Red Robin, yum. Only eaten there like once or twice. They built one in town, and I don't know if it's still open. GoPro, man, look, that's a stock that is beat down right there. We can look at a few of these maybe over the week. And that's what we got coming up right there. That's what we got coming up. Looks like SanDisk changed their logo. Look at that. Alrighty. Like I said, how do we make money today? Let's check in on the chat, see what's going on. David, that was part AI, part me on the monologue. So, anyway. All right. No, man. Haircut? No, this just falls out. Falls out once a month. So, yeah. I'm trying to spice up the content, make things better. That's a lot more me in there. Kimberly says I speak sarcasm as a second language. My daughter wonders how y'all take me seriously because, I'm not normally Mr. Serious. Anyway, I'm glad y'all enjoyed that. I do appreciate it. And if you're watching this later, let me know in the comments if you enjoy these monologues. I'm trying to spice them up, make them more interesting. And there you go. There you go. All right. Jumping in. S&P 500. Yeah, chocolate teapot. Yeah, put that one on the stove. And I tried to use a lot of things to try to get everybody's attention a little better. So this is serious. Like 80% of the gains in 10 names. We got Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla, Mag 7, Oracle, and Palantir. And I forget what the other one was. It'll come to me later. But that's like where the majority of the gains are. So it's kind of scary. Warner Brothers Discovery. If we can hold this breakout right here. If we hold that, turn higher, going bullish. That's what we're looking for, baby. It's Bristol, baby. And jumping over the S&P. Jump it down. Look at the time frames here. Now it's time for serious talk. And I tend to get in the weeds a little bit. So we're probably going to... Based on this, we're probably going up here. Right there. Here comes the market open. I'm going to look at something real quick. I might place a trade real quick right in front of everybody. You won't be able to see it because I'll do it on my phone, but I need to look up this, jump over to this. Come on, baby. Come on, work with me. Yeah, I'm going to sell some of these right here. Let's go. Open up a Robinhood account. Just a minute here. Looks like I may have made a trade already. Possibly. Maybe not. All right. Type in gap. Let's fly out to this. Grab the options. We're going to fly out to this Friday. I'm going to sell a put. Going to go for, let's see. I'm going to go 19. Continue. Do 12 of those if I can. Point. Let's do. See if it'll get 18 cents. See if anybody give it to me. Give it to me. Give it to me. So what I'm trying to do right here. This is on the 50K challenge for anybody that wonders what I'm doing. Grab the options. Oh, there's one of those credit spreads kicking off. I'm looking at this Friday. Coming down here, the 19s. I was attempting to get 18 cents. Doesn't look like it's going to give it to me. That one's at 19 cents. Let's see if we'll do 16 cents. And something just happened. Give me an alert. iBit. That was the alert. It's for iBit. And it didn't fill me on that one at 16. Let's try 15. One more time. No, still not gonna fill, huh? Gap running now. No, it's pushing down. Come on. Feel me like a fat kid in a chocolate factory. I'm gonna leave it at 15. All right, we'll see if that fills, I guess. Let's see. Since my iBit. My iBit is having a problem. Yeah. All right. I sold the 69s. Right there. We're still under that. So we still got room to go. No big deal. If we sell at 69, that was a good trade. Got put down here at 64.50. And we'll get called out at 69. If that was right. Yep, 69. So that'll be a pretty sweet one. Right there. Just in case you're new, not seen this. This is part of the 50K challenge thing. I don't really show these trades off in the public, but here we go. It was these right here. I got put one of these. I closed, 3 of them expired. One of them, I got put shares at 64.50. It's the 64.5 right there. Guess what? It was a good, that was a good buy because I got paid 60 cents. So that actually made the cost of these down at 63.90. 63.90. That's a pretty good chunk right here. So these shares, if I sell them at 69 minus 63.90, that's $5.10 that I made in a couple weeks. Not bad. Not bad. You may be like, well, there's further upside to go potentially. Yeah. Well, maybe I don't get called out. I mean, I got $1. It's highly likely we're going to get called out. But iBit taking a nice run here. Taking a nice run. Let's see if I get filled. Oh, did I get filled? Nope. Oh, I got one. I got one gap at 15 bucks. See if I get the rest. Got 11 more sitting there. Yeah, Celsius popped on earnings. It's into the danger zone. Highway to the danger zone. I wanted it to come back to the daily roadmap line, or I jumped on it again. It did not. Came up shy. But if you got on it, great. Watch out for the 618 though. I wanted it right there. And look at a monster. That one actually looks pretty good too. Came up shy of the roadmap line. So watch out for that. That one may do another move down right there. It's on the, oh, that's MicroStrategy, sorry, MNST. There we go. That popped. That was it. That was the target, right? Here's the high, here's the low. Yep, target. Wow. Watch for that to retrace. MNST, MSTR, MicroStrategy, going on up. All right, so normal stuff. Here's the high, here's the low. 618. This is resistance right here. 420. Breakthrough. There's the target. 80. And then if we get some momentum, here's our targets up here, 560, 600, and we climb the fib ladder on higher. There. So these two big targets up here. Excuse me. These two big targets up here from this big pullback we did, kicking off back in November from the November high, 617, 688, and if we get super spicy, 925, possibly 1,000. Because if we get up that high, we'll probably push it on through. We may come up just a smidge shy of 1,000. So MSTX, I am long these, and they're not moving very well. Want to see this break on out? Get hustling, hustling. All right. ES overnight, benign. Didn't fill those. Still got 11 contracts sitting there. And if it only gives me one, it only gives me one. I'll hunt something else. All right. This moved up. 3 days resistance. Watch for a retrace before we can push on up. We are in the zone where we are likely to push on higher. 65.02 for ES futures. The bottom down here, 62.60. And there we go. Something just happened. Oh, okay. So I have DocuSign also. Jumping back over here. Not to get too distracted here on you, but DocuSign right here. I closed these call options. I just sold new ones for September 5th. So I flew out here to the 5th of September. That's, this week, next week, following week, the following week. Flew out to September. I just sold 82 strike for $80 a contract. Got 3 of those. Back here we got, let's see, where was it? Docu. Yeah, Docu right here. We got put these, or somewhere back in here, we got put those shares. Call options. And that was, I closed that one. I don't know. Somewhere in here we got put Docu. I don't even see it at the moment. So I got put Docu. And I've got 300 shares. So what I did, let's jump over here so we don't disturb our ES chart. Docu. Let's just remove these fib lines. Jump down to the daily chart. This is pushing into support. Right here. Push down in support. We have an A, B, C that could take us a little lower. So I'm not remiss on this fact. I see it. Plus we have the potential bigger A, B, C that's in the same zone here. we might be in for a little more downside. So I flew out, grabbed that 82 strike right there for 9.5 and just sold it. Now there's potential that we hold a higher low and they'll go down here. Doesn't have to go down. That could just be a deep retrace. That was potentially 1, 2, 3, 4, 5 up. 3 retrace, hold the higher low, even though the proportions aren't great, and then we break out and go higher. Now, if we just go ripping, oh well, I get called out at 82. I made some money. If this whole big thing plays out and we go ripping 114, maybe it takes us through the beginning of September to get up in here, back closer to 82, and then I can ride that on up. 114. Still bullish on this. Even if we go deeper, still bullish on this. Just makes the upside bigger. So I sold those 82s, 9.5. I'll post it when I'm done here. I loaded them up. Like, are they automatic? No, they're not automatic. This is what I call the turbo wheel. And they're posted publicly right here as they close, not as they open. All closed trades are posted here, verified. You can see, I mean, not bad win rate right there. If you want access to it, Termar Trading Lab. The only way you get it, links in the description. Of course, I do post the open trades for channel members. Kind of follow along, but you got to read between the lines on what's cooking. So, all right, back to this. If this is high, this is the low. If we stay in the uprights, which we're pushing the limit of, but we're staying in there so far today, if we do the A, absolutely, B, beautiful, and this turns into a C correction, that puts us likely to find a bottom at 61.40 right there as the bottom. So what did I do? I flew out and grabbed. I do have some credit spreads that are automated, but still working on that project. I flew out and grabbed this last night, round number 5, went to 60.10. That's below. Got 25 credit for it. That's 25 points, or 0.25 points. Points on ES are worth $50. They're not worth $100. So it gets weird. It's not $25. It's actually $12.50, but I did 2 of them, so it is $25. So even if this turns sour grapes and we go down here, I'm sitting at 60.10, which is below here. I'm actually sitting right down at the roadmap line on the daily chart. Right there. Even if we did this, it would have to go there, not today, but tomorrow by the close. And we have to be below there to get me in trouble. So that's my daily put spread right there. Even if we tried to get down around 6,100. So when we look at the options here, fly out. If you wanted to do today, see if there's any credit down there. 6,100. Yeah, they've already taken the credit out. So tomorrow, jumping on down. And you still get credit down here. Looks like a little bit less credit than I got right there. You probably have to be up just a few more strikes. Somewhere in this neighborhood, 60-50. If you wanted to play the game I'm playing. 60-50, still not very likely to get hit. At that 60-50, puts you below this extension right there. Good place to play. Unlikely we're going to see this flush down by tomorrow. Possible, but 99.5% likely that we do not see them move. That doesn't happen. 99.5%. 0.5% likely, but hey, there you go. All right. Moving on. Moving on. NQ, That one looks like it's likely to push on out 24,000 after this pullback. Maybe just rest for a day or so, pull back a little bit, and then rip it right back up there. Now, Trump meeting with Putin in Alaska, laying out some sort of whatever. Things could get spicy on the upside. This one right here, struggling. Watch out for this one to break down. We get below that roadmap line. Things are getting spicy to the downside for Russell. Oil. Oh, come on, baby. That's 2 attempts. We get below here. Then we're going down to the 50s. GC. Look at that. Look at that. We tried to break out and got whacked right here today. Glad I got out. This likely to come back down to 33 at least. If not, back to the roadmap line. So we may see something like, we may finally see that trip down here to 32, maybe even 3,100. Finally reset this baby. I'm really looking for a move down below this A wave that we had over here. That low is what we need to get below. Right there. You'd be like, I don't think it's happening. That's okay. It's just a pattern. If we can take a trip right down here, we set it up for a big upside move. Big upside move. Let's just, we didn't do this on the time frame. Just didn't do it yet. Yet, I say yet. And actually it's turned into a flat because of the height of this. So unlikely to get the depth. Likely to just be a flat, which A and C basically end up in the same spot when that happens. So we'll see what transcends out of this right here. Remove a few of these targets. So really gold's still not gone anywhere. We're still sitting in the proportions for an ABC. And we need to reset the targets. There's cool. I love it when they snap 2 things that aren't supposed to be. There we go. That puts the target zone right down here. For that one. All right. Bitcoin, bit. What did I say? What did I say? If we get above that level, likely to go. Here's our target zone right up here. 125, possibly 126, maybe 130. Things like get extra spicy. We're already rejecting a little bit, already finding a little resistance. So we're looking like I like it. Just remove these off. Now we're approaching a potential first move up done. Like that, classic, very classic that we would come up right to the breakout and then do a retrace. That would set it up for the bigger upside move. We've kind of been muddy on the proportions here for Bitcoin. But if we did this, the next move could, if we come back down to here, find support and bounce, that would be the next move. Potentially retrace here and then go for the glory. Might stall out in the 140s though if we do that. Could get to the 150. So what's the path I'm looking for? Potentially, not saying this is very ideal, like the ideal, and this one could go higher, but you know, let's just say ideal proportions, if everything was in happy, perfect land, which doesn't usually happen, but could look like that in the next couple weeks. That'd be pretty wild. Be a wild ride out there. But it's not a hammer. I mean, you can say it's a hammer on the daily, but it's not like, just look at that. That's a 5 up right there. Didn't even have overlap. It's not the best 5 up, but it does have extension on the 5th. Usually we like to see this much bigger, but it wasn't. 1, 2, 3, 4, 5. Retracing. If we dip back in here, hold it. We got to hold the 4. We hold the 4, that sets it all up for the next move. This move's happening faster than the daily chart, so that's what we're looking at right there. Back in here, hold 116 area and get the gusto. Now, the not so good thing would be to stall out right here at 126 and turn back down. So if we do that pullback to 116 and we come up in here, we gotta get on up to 133 if we're going to have any chance at making the 150,000 target. Big winner chicken dinner for the, look at that beautiful rip right to the 1618 and stop dead right there. Now that retrace right there could be all we need, and we push on out. We'll see what happens. Jump it on down. That retrace could have been enough. Like we're just 1, 2, 3 consolidating. And then we go on the next push. If I was going to guess from where we are right at the moment, what the next push might look like. Probably to that 45, 4600 target right there. 4570, 4613. And remember, off the big low back here. Pull this down, pull it down, pull it down. If this is a big ABC, went through this quite a bit on the Crypto Power Plays update. If that's an A, this is the B, and this is the C, this is the zone right there between 4870 and that number right there, even though that's up to the target at 6,000. If we stop in that zone and turn down violently, break back below this 2600 area, we're probably going lower low than we were back here in June of 22. Right over here. Probably going lower low than that right there. That's the warning sign right there. If that makes a 3-wave corrective move up, that's why that warning light is right there. If we get that kind of price action and we stop right in that zone, 4870 to 6,000. If we stop right in that zone, that is the danger zone. Right there. Danger zone, danger zone, danger zone. That turns down, breaks back below that 2600. This consolidation. Trouble. Big trouble in Little Chinatown for Ethereum. NKD hit my alerts this morning or last night. Pushing through to a new all-time high. If we can actually stick this breakout, probably going on up to maybe as high as 50,000 on NKD. That's a global liquidity expansion. Pretty major one. Probably take a lot of our stuff higher. Dollar. Still churning in here. Churn and churn and churn and burn and burn and burn. And first move down, retrace, hit the 618. So even This gets pretty simple here. It's either ABC or 1, 2, 3. Same kind of pattern for both. So why do I look for the absolutely beautiful correction proportions? Because it's the same as a 1, 2, 3, same as an ABC. First move down. Hey, Ted, thanks for being a channel subscriber. That's potential A. That's potential B. Here we come down for potential C. If we stop here, that's C. If we go for the downtrend of lows, that would be a 3. And we could retrace, hold the 4, and get the 5. This is actually what I would expect. But this is where what you plan for. All right, this one's the one that's more than likely going to happen. If we do that, we know we're going to probably do that. If we stop here and turn, we're probably going to break above this sooner than later. All right, clear as mud for everybody. That's the dollar. Apple. What's up, Apple Dumpling? What's crack-a-lackin'? Not looking very bullish today. Be careful. The market may have moved on. If this starts drifting back down below the roadmap line, that could be the last move of the ABC. What ABC might you say? We had the A wave up, the B wave retrace. And if we got the C wave, it could take us up here, but do the proportions and we're in the uprights right here. There's the uprights for a correction. It's very, very choppy in here. Like, was that the A wave? And then this was a prolonged B wave. Impossible to tell for me. Looks very sloppy price action. It's all indicative of a correction. I still expect downside on Apple. Amazon. It's got this gap to contend with to go higher. Same sort of potential correction. We did take a little trip out of the uprights, but we popped right back down in. If we break down below the roadmap line, watch out on the downside. Google. It's my job to warn you of the potential bad, all right? Not necessarily, you got to make your own decisions. Like, I can't babysit your account. So I warn you of the potential setups here. Google can very well go back into this 136 area for a flat. First move down, retrace. Haven't filled that gap yet. Turn down off of it can take us right back to the lows. Meta, probably going for, see this one bucked that. We can still do it, but we're probably going to hit that 793 first before we do this echoey type thing. Now, why am I so adamant that it's probably going to happen? Look, right, Microsoft did it right there. First move down, retrace, next move down, and then we went shooting off. This one's still likely to hit that 565. We came up just a little shy. Probably going to retrace, find support before we push on higher. NVIDIA just keeps pushing out. Probably going to go up to 212. You consider Microsoft 1618. Already got there. NVIDIA just grinding it out. It may do a crazy pop on earnings. Right there. 212. That could be, if we do that, could be the top for a little bit. Possible. Holy bananas. Look at her go. Watermelon seed squeeze popping out as long as we can stick it. Push it back up in this zone pretty quickly right there. Had a 350 sold for my dad. That'll make like $4 grand or $5 grand or something like that. If that's above there on Friday. I'm not going to sweat it, that's for sure. Netflix, working on that 618 retrace, back up in that resistance for the A, B, and then we'll take a trip down for a C, more than likely. All right, gainers for the day. MicroStrategy giving it up a little bit. Watch out for that Bitcoin retrace. TMDX in that danger zone. So is this the bounce? That is technically above the 618. That would technically set us up for that. But it also has the potential to go down. So it's one you got to watch for. Like which way are you going to play? Are you going to play for the breakouts to new highs, 153? Are you going to play for the deeper retrace, A, B, C? It's not very clear because this move right here didn't look very clear on the retrace. I like it when they have a nice clear 3-wave. That very baby move right there, and it's not proportional. We actually hit the continuation levels if that was the move, but then we overlapped. So this provided, we went to the 1618 extension right there, then we retraced and we overlapped. So now this is not impulsive, makes it corrective and uncertain. And then we have this, you'd be like, well, that looks like a 5 up right there. Possibly. Proportions kind of work. Didn't really. It's kind of choppy. Didn't overlap. So this high right here, pull that across. That low right there didn't overlap. So that could be bullish and could take us higher. If I was going to bet on it, the pattern says 75% of the time we're going to go up here. So there you go. There you go. You can see, did it kick off? Yeah, it did. It kicked off the entry right there. So it met all the criteria to go higher. Target's 153 on TMD. What the fudge? All right, coin. Be very careful here. Gap down is resistance. And we can still hit this lower level here. Still hit the roadmap line. ALB. ALB. Amble marble. Yeah. I'll be moral. I don't know. I'd be careful on that one. This price action, not bullish. Could be in the A. This could be the B. And then we could be working on a C. So even if we hit a higher high, we could still come back down. Unclear is what I would call that. Probably going to rally up to 89, 90 to 92 right now before we do another pullback, but can't say for sure which way. Yeah, 4 out of 3. ETHU. Man, we hit my target. Jeez. Cheese and crackers. 190 would be the upside right there. SPNS. Big gap down. That's resistance. IMXI. Wow, that's a big pop. So that one might be done correcting like that. If we could get back above that gap at 18, we could be heading up to 31 on that one. BMNR. Be very careful here. MU. Yeah, baby, go. If we close today above that 618, game on. Let's go. Looking for this target up here. Supercharge alerts been holding MUU. This thing's been lackluster. I'm looking for this to actually get some legs and move. URA finally, look at this. Finally hit my 40 target. I've been talking about that for what, 3 years? Since this pullback over here. Finally. I'm going to sell 46 for my mom out to September. That looks pretty good. Wow. That wasn't on the list today. I happened across that. So ETHT. Beautiful. Here's another one that my mom told me to buy her gold at the beginning of the year. I bought, or actually, she called me in October last year and told me to buy gold. I was like, no, but I did buy it here. I bought 60 strike upside calls for like 90 cents a piece. And now I'm trying to sell them out for $12. That's a pretty good little move. This is still bearish though. We're in that bearish reversal zone. This is 3 waves up. Be very, very careful here. Let's move up. Let's retrace. We're in this bearish reversal zone right here. Can be an A, B. I didn't even hit the bottom properly. Freaking snap thing. Snap tool, snap to the right stuff. Gosh darn it. There we go. It's A, B, C. Strike that, redo. A, B, C, and then this is a bigger A, B, C down here. So watch out. The one to bet on going ridiculously higher is AEM, break out new highs. So over the weekend, I was doing some research. I'm just going to neglect the list for a little bit here. Doing some research. If you go after, hold on, I need to, uno momento. I thought I had a tab for it, but I don't. I closed it like a genius. Let me pop this up and because it's going to show off my personal information just like it did. And then we go to, you can pull this up anywhere you want to, but 52-week highs. That's what I'm looking for. 52 week highs. So these are all making 52-week highs. If you look at stocks that are making new 52-week highs after consolidating for 3 to 6 months, they are likely to outperform the S&P and the QQQ by 30%. I was reading an article on Medium and then doing some work on this, and a prime example of that, this is how you find them, but the example they were using that was very clear is this one. And they just went to a monthly chart like this. So on the breakout, after consolidating for 1, 2, 3, 4, 5 months, broke out to new all-time highs, likely to outperform the S&P by 30% or more. Right there. So another one that just showed up on the list, or that's showing up today. You just go through these. Look, see that same consolidation right here? Broke out, outperform. CMI. Another one, look, we consolidated for 1, 2, 3, 4, 5. This one's fresh right here. This is likely to outperform the S&P by 30% over the next 6 months or so. 6 to 12 months. That interesting? I find this very interesting, this pattern. Generac, look at this. Long consolidation. Six to 12 months after being in that consolidation. So there's, I mean, I'm just going down the list at this point. Just CBOE. That one didn't have that three, like, I guess technically consolidate back here, but then now we're played out over here. We've already, we've got 1 month, 2 months, 3 months, 4 months, 5 months. Maybe you got one more. I mean, maybe you can keep going, but that one's already kind of played out. And that one, way too long a consolidation. J&J. This one, way too long a consolidation. You want something that's trending, stopped for a little while, and resumes the trend. It's like that one, maybe you could say it, but that's 1, 2, 3, 4, 5, 6, 7, 8. Took 9 before we broke out. It's a little long on the consolidation. Here's another good one. ANET. 1, 2, 3, 4, 5, 6. And we're breaking out on 7. So this one also likely to get, you see what we did over here. Look. Sometimes they can go longer than, so they repeat a pattern. It said it's even better if you can see this happen multiple times on the stock. See, we did it right there. Do it again right here. It's quite fascinating. I think it's quite fascinating. I'm always looking for new ideas and indicators. So how do you do it? Market Chameleon. Click on the 52-week high and lows under stocks right here. 52-week high and lows. Sort by 52-week highs. Pull them up to the top. And start hunting. eBay down in there. eBay might be an interesting one. What the nuts was that? Oh, that took way too long. That consolidation took way too long for this to be the pattern. Let's see. Looking on down. You can sort them by, price. I was looking for another good one. Cool. Froze. Beautiful. What's up? Nothing. Love it. All right. Move on. That one's not going to pull up. Maybe nothing will pull up. That'd be cool. Lumentum Holdings. All of a sudden, I guess TradingView died. Something. Doesn't like that. I guess it doesn't like that monthly time frame, I guess, maybe. It's like, I don't think so. Well, this one did a nice consolidation, did take a few months, and we're breaking out. So that one might go on that run right there. And let's see, COHR. Yeah, this one, fresh, right there. Fresh break higher. I mean, this is kind of the same pattern I look for. It's just the big extensions, right? So that's another interesting one right there. All right, let's go hunt for some opportunities today. Wonder Day, getting beat down. Hunt for a bottom in that one, but ouch. Let's clear that up. A, B. We're in the C zone. Could go down to 162, 135 if we're gonna get continuation lower. So looking for this to start reversing. It's not necessarily pick up the pieces though. I would be very careful. Adobe, hunting for that target that I've said at down here at 310 area. 320, 310, 320. I'm waiting for that. And let's see. Gold, XXRP. Popping, now we're dropping. DXYZ. First move down, retrace. Watch out below. AEM pulling back a little bit, although we're coming back up. Pretty good. Shiny. Looks like it's hunting the roadmap line. New egg. Yeah, be careful here. This thing, it did a reverse split and has been running, but yeah, it was never this high, so be careful. Apparently, I turned off all the dividends and stuff some way, somehow. And they're on here. They're just not showing up. Cool. Thanks. That's super helpful. This might be entering a downtrend. Be careful. Elliott wave-wise. Got to break above that high from back over here. Over here. If we don't break above that high, correction time. DOCN. Digital Ocean. Here was the high. Here was the low. 618 turned down. So that could be an A, B, and the C goes down here. An AGQ. Watch for that. I'm going to put an alert here. If that gets down there, I'm buying more. ACT is... So ones that are actually set up with the pattern today. If trading view is going to work. Man, this is... What the heck? It's like 1020. There we go. There we go. See, this one worked out last time. Right to the target. And then this is why don't go for bigger. Right to the target, right back to the roadmap line. So got the setup again. Here's the high, here's the low. Activation 3862, next upside potential. Maybe like, whoa, what about the statistics? 3, yeah, not really a great history there. ADA, ADEA, say all the letters in the right order. There you go, 1530 upside target. ATLC, come on. Come on. Oh my gosh, come on. Nothing. $68.37 on that one. Oh, no, that's not right. This swing right here. 61.36 has no. Oh, it unloaded my. There you go. 1384, 8.5. It's got a big profit factor, but not a statistically significant history. This one kicked off from back here. Currently, we have this little baby move with the baby 28 target. ESNT. There's the high. Here's the low. 6280, 1464, 1.1. KE. A lot of these look pretty good today compared to what we've seen the last few weeks. The 2080 keys, Keysight Technology. Boy, this has been sideways right there. It picked up that smaller high right there. 170. Roll it up so you can see it. 170 target potential right there. 9 trades, 66, 1.2. So none of these matter. It goes 74.8% and 1.28 profit factor. Because there's not enough trades over here. MITK. There's the entry, 1080 targets. That was a fair one. It might hold up for 30. Let's see, Road did not hit the roadmap line, so be careful. That may go on to hit it, but that did not actually hit the roadmap line. That was the difference in Python picking it up for me. And that one, obviously not the right ticker. SCI. That's the one we're looking for. Here's the high, here's the low, there's the entry, and 84 target. 42 trades, 90% profit. This is smoking hot right here. SCI. I may actually take that one. See if I got money for it. I got all my gap filled. Gap filled. See if I have any money left. SCI. Let's buy 2 shares. 2 shares. 161 bucks. Done. So what's the target? Target price is 84. So we'll put in the closing order on that. Trade. Sell. 2 shares, 84. No, I have to do not market order. I have to do a limit order. Continue. 2 shares, 84. Set it to all hours. And there. So there we go. I entered 2 shares. Why 2? That's what I want to risk. There's the target. Put the alert up here. Don't usually do a lot on here, but we're doing some trading today. 84. There we go. SGHT. Here's the high, here's the low. Potential for 470. STE. Oh, messy. That one worked out pretty beautiful last time. Here's the high, here's the low. There's the entry. 257 on that one. 40 trades, 80%. That one's even. That's a nice one too. I don't have the funds to buy a bunch of that one though. I like that. I like it. I like it. I like it. That'd be another good one right there. A couple good ones today. There's the high. Here's the low. There's the entry. $7 on the target. 23.91. Got another good one right there. 23 is not statistically significant, but these numbers are pretty smoking hot. And even with 7 losses, these are still going to be pretty right in there. So it may wipe out the profit factor, but percent profitable is still probably going to be running pretty high. All right, as far as bias for the day, yeah, push on out. That's what I expect. Like target right there. That's what we expect. Thanks for coming, everybody. I'll be back again. Same bat time, same bat channel. Tomorrow, do it all over again. Have a great day. We'll see you later. Bye for now.